Startup small business loans for small businesses needing to build, grow, expand, and even get out of a tight pinch, especially being introduced to 0% interest funding without documents or very little of it for startups and non-startups. Bad credit, fair credit, good, great, excellent. All of that will be included in this video. So stick with me. In a second, I will get into the share screen. But before I do, if this is your first time watching me, my name is Michael, and I've been a business funding expert, a business loan broker expert for many years. I know my ways in and out. I'm very ethical. I'm not a salesperson. That's not me. I went through academics and I have the right morals, core vision, value, and mission in life as a person, integrity, loyalty, trustworthiness, being very reliable. Those are things that I have, and you don't have to worry. And I'm more of the very introverted, analytical, cerebral type. And I review a lot of bank statements, tax returns, P&Ls, you name it. I do that day in and day out. I love math, numbers, systems. I'm like the back end person. And I also love helping people and helping you grow as a person first and foremost, and then in your business. That's where it all begins. It's not your credit, it's the foundation of you in your personal transformation, in your development, your characteristic traits, who you are. How can I help you in many ways within your health, your relationships, your wealth, all of that included. So, right now, I'm going to jump into the share screen. And what you should know is this one option I'll start off with, and then I'll go into a few other ones. And this one I'll show you on how to find different solutions for it. And then I'll try to get into some of these other ones much faster. So, let's dive into this. So right here, what you see on your screen is the U.S. Small Business Administration funding programs for a list of micro lenders. So microloans with the SBA, you might have heard SBA microloans or SBA micro lenders. So SBA works with designated intermediary lenders across the country to provide financing to small businesses. Find an intermediary near you. Contact one you see right here, how you can find them. I want to show you how to search for these. And before I get into doing that, they can go as low as 500 credit, more or less, and it can be on a case-by-case basis at that point, and what they see best fit for the state, for the type of program, and what they can really give realistically at that time. And then having this on hand can go a long ways if you are from complete scratch startup, no revenue coming in, to 2 years time in business, and can offer up collateral and or a personal guarantee, or just or personal guarantee with a business plan and at least 2 to 3 years, the other two words again, projected revenue. If they ask for cash flow profitability in that, just expect that. And if you need help creating a plan for this, I can help. And then other resources to use to create this is something like ChatGPT or using AI. Say, hey, I'd like to have a business proposal. Please create for me a grant proposal or a loan business plan on an industry for da 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 da. So there's quite a few ways to go about it. You might already have your own business plan. There are other ways to come up with this as well. Then I can check things and help you along the way. But in here, what you see, it says states, territory. Let me go ahead and use the drop down. So you can select from your state that you're currently in, that you're running your business through. And over here, let me select Washington, and you can click on filter. Here, it'll give me all the names on the left, the middle field, state/territory. On the very right, contact information, so you can get a hold of them, and you can go through their website and see more what's up to date as they release new news. Mercy Corps state, the New Roots Fund in Washington. So if I wanted to click there, I could do that. You could do that for your state. If you're in Washington, then great. You have for California, Alabama, you saw many of them there. Contact, the details there. Have questions or suggestions, you can write in here from the name, the email, the phone, and to the message. You can do all that. And if you need help with that too, I can go ahead and help you on that. Choose an option. You can go right here and what language, other. So you have all the navigation there to go through. And if I come back to this page, I can go through and look at more of them. If I needed to look at and apply for more, that's also something to take account of, is don't just sit back on one. it's like anything else out there. Just with these, look at one and you decide that's the one that's most focused for you and that's what's going to work. Now, if there's another one closely to it, there's that. And even if it weren't, like, don't just limit yourself. And then the response time, they might take a little bit. And then there's that. So, rural community development resources. So I can click here for Washington. You can go through all this, the latest news on the right-hand side. You'll get that. Read more, their investor service area. So you can see that right there from a glance. And then go in there and contact them if there's an application or anything similar to clicking a page here for pre-qualification, or here's how you list your details. We want this added first before we move into the next stage, or they will tell you later for that. So I can go through this page and check those out. And when I'm ready to contact, I can send them an email. I can call them if the email and all that is provided there, as you most of the time will see, contact number in various ways, more than one touch point. Send them an email and hey, I just wanted to let you know that I sent you an email. And you can do that, like call in, hey, I sent you an email. And asking to prioritize it, they may not, or expedite it, or in another sense, because it gets so many submissions. But if they notice you doing that and you give a good reason, there is that aspect, but don't always expect that to be like pushed through just because. But that's what I wanted to leave you with microloans and being somebody who can take coaching, somebody that can take mentorship. That's what you need to be open to as well. So what if that doesn't work? Or what if you wanted to add this on top of another option or wanted to look at something completely different? Then there are many options. So if I come over here, let me show you this first. This is my business loan questionnaire. You might have seen this or have filled it out and I got back to you, or if I've yet to, there's that. But down below, I'm going to leave this. Get the funding your business needs fast with the help from a real expert. Please select from the two buttons below to fill out the right funding questionnaire. Non-startup on the right, startup on the right side. You see that. So you can kind of equate that to 3 months being still startup, but when revenue comes in, that's what changes things. So plus free 6-step pre-approval funding or lending checklist included, and a 900 plus exclusive free grant documentation list too, more or less 900 being up to date. So you don't have to look everywhere and anywhere, just on different YouTube channels, and you get another high, another dopamine hit. You don't even go apply, or it didn't even work. You're just looking at grant opportunity after grant opportunity, and that's all you want to do. You're not even open up to anything else. Maybe nothing else works, but what you need to focus on is the foundation. One thing as the credit, but it's another thing to focus on what I don't know yet. And as a person, see, what you don't know can take you in so many directions. And that's an obvious. And what you think you know is not everything either. And so there's always something changing. So being up to date on things, I can help you and guide you. So let's say start up here. I can select this button and we give it a second to load. Please read through that. Down here from your name all the way down to please describe your financial needs here. Example, expand on your use of funds, expectations, ROI, your major problem, cash flow, projection, this. Be thorough. Give me more so we're energy and time efficient. It's not an application. Then what I do, I can put together an evaluation and I analyze it because I know how to do that very well pre-underwrite. Once the documents and everything, it's pretty much done from there. I understand it even 10 times more. But from this, I can understand it just by knowing this, and I can put together a highly comprehensive and personalized email response with the PDF showing you your best funding option and options and things that you can't just normally find online. So all of this is there and down below in the description. Make sure you check this out. And there's this first page too. Just some of the results that I've generated. I've done a lot more, but just gave you a handful there. You learn more about myself, company, and so forth. So now coming back to this page, I want to show you now on the startup funding options. So we went through micro lenders. That's one of the options. Let me put this front and center a little bit. The next one is grants. So you can kind of tie that in with microloans and what they're able to give you. And grants, they can take some time now in this market, and they come and they go quick because a lot of people are having difficulty with cash flow problems. People can be on 2 years, they want grants, and it can be hard for many trying to resurface and get the right grant. It's not always that it needs to be within the state to qualify. Um, but with that, I mean, like, it has to be a directly related one to a state. Like, you might see some that are projected and helping out with various locations all across the US and in other areas. So there are grants, they have their place, and I won't go through all that in this video. If you want to check out the 900 or so grant documentation list down below in the description, more or less 900, and you get updated, you understand what's current and a lot of other stuff. then check that out. So grant opportunities are there. Peer-to-peer lending, you kind of match that in with micro lenders and grants, peer-to-peer lending. And I won't go too much into that, but micro loans, shorter term loans, a lot of CDC subsidiaries, 401k IRA, and I can add that one as a separate one. So 401k IRA, you could do a business rollover account, put it into another account with any assets that you have that we can convert and give you working capital, extract the percentage from it. This is a very common one for a lot of startups when you've exhausted everything. And it's common too when you start a business and you form it in an entity, or at least you have a partnership with someone else that you guys can both bring in your accounts or however much you need, or one person helps that. And you give your other part and your other portion from another place, perhaps. So we're 401k IRA business rollover account. That's very helpful. And that's another option that I strongly recommend looking into. A very common one that I see is creative credit backed funding, or you can have said, I could have said another word for it, but this is the one that I help out a ton of people with. And you can leverage your credit if it is in good condition. That's the caveat. It's not a catch. It's just good credit wins. And by good credit in this market, it wouldn't even be a 670 or a 680. I'd say 700, better 720 if you're in the 751 and above. And on all three consumer credit bureaus, it's not always enough to just have it on one. I have those lenders, but a lot of them will look at the other ones too. You'll win. So 670 could be a base point, and we can look at doing a personal transformation of personal credit to then get you business credit ready, or add and bulk up the account and accounts. So then you can be business credit over a couple of months, then ready, if not sooner. So what you do in the meantime really does matter on how you keep checking your credit and how you keep improving it and managing the credit that you have. So there's quite a bit of that I can help out with. There are personal loans that I help people with. You can also hear personal term / installment loans. There's other words for it too. And this is where we can do a lump sum as a complete startup, leveraging your credit, leveraging at least 2 years of personal tax returns or your pay stubs, W-2, and this stuff I can communicate with you over time based on your situation. Are you self-employed? Are you not? Are you still in a business as an employee under an employer? Depends on that. And then what we have to check up and what we have to collect. There's quite a bit for each situation. So there's that in the personal loan, but from 1 to 5 years normally is what you see, with up to 500,000, if not up to 350,000. These can take about 2 to 3 weeks, maybe 3 to 5 weeks, depending on the circumstance and the situation. So they're not as quick. So you want to plan ahead of time, have already a business plan. If you don't have it already concrete, that's fine. But planning what you'll do with these funds and what you are doing in the meantime to get ready for it is important. So personal line of credit, that's a lot harder in this market to get. And that normally can take like 725 plus credit, 700 plus credit on all three, but 720, 725. Nowadays, you're seeing 750, if not excellent credit. And those are just not easily issued, especially from banks or from private lenders, because there's so much volatility and people making the repayments is not as high, or it can be as high, but they don't make it back, and they don't use a personal line of credit for how they really needed to use it. There's so many other reasons, and it's a lot harder and treacherous to even just get approved for that. So you have the personal line of credit. There's a HELOC, home equity line of credit, or home equity loan. There's that as well. I won't go too much into that right now, but I'm sure you're familiar with it. It has its pros and its cons. And if you can't get it through your bank, there are other routes that I can help with, but it has to make sense and it has to align with the requirements and all that. And so, yeah, there is that as well. There's more things you can do with credit based on that. Cash out refinances you can look at on a primary, secondary home, all these other things that you can look at, liquidating assets, convertible notes. There's so much we can go into on all this, marginal bonds. There's financial securities. There's uh, life insurance policy. There's so much we can get into, but I'm going to cover as much as I can here. So home equity line of credit, home equity loan, and cash out refinance for minimal credit. You can get in with like real estate as low as a 600 credit score. Sometimes it has to be higher. Sometimes it's low, like 550 and above in cases, depending on the net, depending on how much value is there, what's the location. Is it right to do? So looking at taking equity out of commercial real estate or investment real estate that you own, I've helped out plenty of people do that. I won't get into all the numbers. That's not what I want to make this video about. Otherwise, it'd be here for 5 hours plus on each one of these. I have them all up here. And I know because I'm in the meetings, and I know because I am back and forth with my lenders and my team, the team on all this. So I know exactly like 9%, 10%. Like I know all these examples. Prime rates being 8.5, or by the time you watch this, 8.7, 9, or more or less, plus 1 to 2, 1 to 3, 1 to 5% on this type of service. So there's quite a bit. But taking out equity for what you have, 65%, 85% LTV, 80% LTV, there's a lot of other stuff to look at depending on the type of asset or assets. If you add multiple or one is enough. For how you use the funds, that can normally be up to you. Starting a business or helping somebody else acquire your business, starting their business. You can leverage somebody else's credit. So if you don't qualify for a lot of this with like personal loans at a 680, 700 plus credit score, sometimes 670 just due to debt utilization, DTI, and all that other stuff, then we could look at other scenarios. If you don't qualify, you can use a credit partner to assist you. If they have the better credit, they can personally guarantee no co-borrower, no co-signer here. I have a lot of people who try to do that, and I'll let them know that that's not how these work normally. It's for business purposes, not on the personal side for like personal. You're using it a majority for the business. So you can bring somebody in with better credit that can guarantee it. They don't have to be a business partner. They don't have to be a percentage on the operating agreement and all of this fulfilled. But if they are not, they can only go for personal loans because they're not a part of the business. If they are a part of the business and at least own 10% of it, then we can get into 0% interest and the business credit cards. So if they have at least 10%, that is very helpful to do. And then later on, until then, the lines can then be transferred in various ways over until you increase your credit rating if you wanted to do that. But to help you and also pay off other debts and what your goals are, there's so much to look at. So cash out refinance, you have also commercial vehicles that you can look at doing that, rental real estate, fix and flips, like all this other stuff, commercial side, investment real estate that you own, normally free and clear, and you can use and leverage somebody else. And there's quite a bit more that I can go down this route, but I'm going to leave it at that. So you have business, let me put business and personal credit cards at 0% interest or just regular. So you can start off with business credit cards for whatever program you want to pay for or to increase revenue, whatever it is you're trying to do. But how I help people too with business credit cards, and let me flip the screen over here to go over more or less what I'm looking for when it comes to this side of the equation. And I might leave this down below, and if not, it's okay. But here's what I want to cover, and things are always changing. I have a lot more too. But for the credit card stacking, I didn't even have to look at this, but I wanted to show you what I'm looking at. So personal credit score on all three of your bureaus, 700 plus. It used to be 670 or 680, excuse me. But in this market, I wouldn't be surprised if that number goes up to another 20 points. And now you're looking at 720, ideally 725. And if you get in that range with all three or two of the three, you're in better standing. And it depends on what kind of credit, the institution, what you already have on your reports, not just the credit score itself. And I look at a lot of this. No more than 4 bank inquiries per bureau in the last 12 months. Ideally, no more than 3. No more than 3 in the last 6 months. If you want the top tier banks a lot of the time, and I'm not going to go through every single detail. I have a lot more just so you know. I'm not giving all of it here, but you see it. And there's so much more that I know with credit too, credit, revenue, collateral, a lot. In the last 12 months, so it does not include secured inquiries like auto loans and mortgages, no more than 3 unsecured accounts opened in the past 12 months. We're being lenient already. Could have said 6 months, but 12 months. Does not include secured inquiries like auto loans and mortgages again. Keep your utilization under 40%. And that's a big drag that I see in this market right now is utilization, not even like negative accounts or negative credit reporting. Like just utilization alone has climbed up so much, but under 40% utilization on each revolving accounts, no bankruptcies at all showing on your credit file, no open, or in other words, unpaid collections or judgments. And again, no late payments in 2 years, no charged off accounts. Take the word again off of there, but no late payments in the last 2 years. With personal funding, no late payments in the last year. No charged off accounts included. Seasoned major bank card trade line limits of at least 5,000 plus, meaning that you have to have 2 cards with at least 5,000 plus on each. You must have a minimum of 2 open revolving accounts with at least 2 years of history or more. You can have one open revolving account if there's an aged mortgage with at least 2 years of history, or one open revolving account and aged entity over 2 years. The mortgage really does help you. I've helped out a lot of people that have reviewed credit for, and it's just like no mortgage on, or this has been closed, installment too many, installment closed, how much bulk history on revolving, average age. I look at utilization, average balances, or how much total balance. Like I look at it all. And there's so much more that I do on the back end. If scores are less than 700 only due to high balances on revolving accounts, you may still qualify, quote unquote. Here we focus on credit cards, and there's stuff there that I go through. Personal funding, more or less, you see similarities with 1 year no charged off account. Seasoned major bank card have at least 3,000 limit. That's a different set of five. Must have a minimum of one open revolving account with at least 2 years of history or more. Things can be subject to change. So there's that I wanted to show you. And as I come back to here, and I'm going to wrap up the video here soon, we covered all this. There are quite a bit. Even if you're in the 3 month stage and you need revenue, and you have revenue, we can look at revenue as just as low as 3K on your lowest month in the last 3 months, sometimes 4 months. So if you're in 4 months time in business, maybe sometimes 3 months, and you have at least 3K on your lowest month, then we can look at getting you revenue there, and then look at some of the other options later on, or those come before this one if you need an addition to it. And there's quite a bit more. Another one, you look at SBA loans, like the 7A program, that you'd need an SBA equity injection of at least 25% to 30%, or if not 35% equity injection. And that also depends on experience level and how much management, how much supervisory, how much of a role did you play in what you're doing now or in a different business. And then it might be 10 to 15%, 10 to 20% based upon experience. But a lot of the times I see 25 to 30, 25 to 35%, if not more than that, on closing, working capital extended amount. And then for liquid assets, convertible cash on hand and in the banks, there's so much more to look at. But equipment financing, that can help in some degrees for the startups, but it's become a lot harder to help people get equipment financing because of credit, and especially in trucking and transportation, it's hard to do a lot of that. But equipment, and ideally you want credit in like the 650, 700 plus range, sometimes 620, but ideally 700 plus a lot of the times in the market. So that's one route to go to as well. Collateral can be sometimes difficult if they're expecting revenue and account receivables, minimums, the inventory, and then there are other options that are available out there. So I've covered as much as I could. I know there are quite a few other options that are available. I showed you the most common ones: liquidity, cash on hand, equity injections, with different solutions for credit-backed funding, personal loans, personal term/installment loans, creative credit back through credit cards, personal and or business credit cards, 401k IRA. We can do stocks, mutual funds. You have hedge funds, you have the angel investors, you have other forms of private equity, venture capitalists, and there are more. But I'm giving you as much as I can, and we can try to add as much as possible if the situation makes sense for your needs. And private investors, private equity, if you needed to even go down that route, if it made sense. But there's that. And if you can't find this and you can't do it yourself, get a credit partner. Find a different opportunity that can create that cash flow to then put into that business too in the meantime. So there are those routes too that I can help you with too. And just reach out, and I'll leave my information in the description. And again, this questionnaire form will be down below in the description for you to check out. And as I go over to my screen here, I was going to go into the Sketchpad. We're running out of time here, but I wanted to show you this whole like ladder. Sorry, I'm going to do it this way. And here from the startup phase all the way to the top, which are most coveted, are the SBA loans, and everything in between. You see revenue, collateral backed, and you can even see bank backed without collateral. And then over here, you see credit solutions, the foundation of building your business. And the foundation is you and building you as a stronger person. So that's all I wanted to mention in this video. If you got great value from it or any kind of value, I'd greatly appreciate you giving it a thumbs up and sharing it with others that you feel will find value from it. And if you don't, it's okay. And if you haven't subscribed, I'd greatly appreciate you doing so and clicking the bell notification icon so you do not miss any future startup content, any other non-startup content in the future. And then you can also leave me a comment down below and I will get back to you in time. But like I said, I've covered quite a bit and there are more options that are available, other subsets of a lot of this, but I wanted to cover for you what makes most sense. And as you continue to climb, I'll help you in your journey and align you with the right lender and lenders, and for you to understand that a lot of this is best suited for you. So that'll cover everything for me in this video again. Really appreciate you for being here, and talk to you on the next one. Take care.